We were talking earlier in the program about what we could actually expect from Nvidia, and I'm curious about the sticking points in your view. How does this kind of change the picture, not just for Nvidia, but set the tone for the broader tech sector?
Okay, no, good question. I think, I mean, with the volatility we've seen in Nvidia's outlook and question marks that have been raised several weeks ago with the delays on the Blackwell chip, I think there have been bigger fundamental questions asked about the sustainability of demand within the AI sector. Whilst I think the long-term outlook still looks good, and there are plenty of applications where this new technology, has significant use and should realize cost savings and efficiency savings in the long run. The question mark at the forefront of people's minds at the moment is, companies are, driven by fear of missing out, are spending significant amounts on capex at the moment. 10 billion plus in capex per quarter. How sustainable is that if they're not monetizing it at a fast enough rate? So I think that sort of medium-term question is an overhang on the sector at the moment. The degree to which Nvidia can address that concern remains to be seen, but we'll hear on that from the results later today. And then obviously there's all the near-term potential execution risks with the production delays that we've seen on Blackwell, which caused the volatility several weeks ago. So again, that's going to be another core focus for these earnings.
Well, talk to us as well about where this demand is actually coming from. You use that keyword sustainability as well, and I think the concern around here is that these hyperscalers can't continue to fund, I think it's somewhere between 40 to 50% of Nvidia's bottom line. Where else is Nvidia seeking that demand from?
Yes, absolutely. It's a very concentrated customer base, particularly on the high-end data center business at the moment. So they're looking to broaden that business out, try and increase demand from a broader range of lower-end corporate customers. But again, these chips are not cheap. Depending on the variant you look at, they're sort of $20,000, $30,000 plus. It's an expensive hobby. So there needs to be a firm business plan and a realistic chance of these companies monetizing and breaking into profit. Plus, they need the balance sheet as well. It's an expensive business to get into. So again, I think these are potential barriers to the wider proliferation of this technology outside these cash-rich hyperscalers. I think there is potential demand there, but again, is it going to match market expectations with the stock pricing in so much, and at still a fairly punchy valuation compared to its peer group?
Well, Robert, I also want to talk to you a little bit about this kind of regional diversity that we're seeing as well, because Nvidia was one of the chip companies that had to tweak some of their technology in response to some of the U.S. Kind of sanctions rules and the limits when it comes to chip export controls to China. It's handy that you're sitting in Hong Kong, where Nvidia had to make that extra kind of chip to cater to that audience. And this is something that some of its peers have not been able to do. Micron is just one example. Intel's still struggling with that pivot as well. Even ASML right here in Europe talking about how to navigate those export controls. From your vantage point, what does the broader chip sector actually look like given those geopolitical headwinds?
Yeah, no, again, a great question. I mean, geopolitics is really driving a lot of the decision making within the broader semiconductor sector at the moment, not just the issues that surround the island of Taiwan, but also the increasing economic competition, particularly in high-end technology between the US, Europe, and China. So high-end semiconductor fabrication and also tied into AI are a major driver of this increasing geopolitical tension. So that is forcing China to try and double up on its efforts to drive or to become self-sustainable, not just in semiconductor manufacture but also in AI. And the impact on Nvidia is, historically, China's a reasonable proportion of their business that's been shrinking in recent quarters. And obviously, the export bans in geopolitics are not helping the outlook on that side of business. Obviously, it is not a prime driver of their revenue at the moment, but again, it's a potential headwind that's likely to grow in the coming quarters as China again double downs on its self-sustainability objectives.